Good evening, everyone. Welcome to Closing Comments here on October 22nd. Let's jump right into our charts and see what happened in the markets today. First up, we got our December live cattle on the board. We did see another big red day hitting the cattle market as prices didn't respond well to some more President Trump's comments today. If we look here on our intraday charts, we can see this market opening up, briefly making a poke above that prior day's high before settling all the way back down here towards 243. Middle part of the day, we tried to find some support. Bulls continuing to step in and try and buy this thing up off of yesterday's opening range and support this week's bull pivot. However, just started to slip there right up until about 10:49, which is when President Trump uh, released his tweet and really sent this market lower. Breaking down there below that bull pivot, also undercutting our prior week's low here at 241.40, really getting the selling underway, pushing all the way back down here towards 238.5. At the moment, this market closing down here below our bear pivot kind of has us in hands-off mode. We encourage everyone to kind of get defensive here while this market continues to sort out this volatility. This little rally attempt we saw early this week was definitely wiped out here today, so we're just going to encourage everyone to take a step back and get defensive here at the moment and let this market kind of sort out some of this volatility, see if there's going to be any more information released, or see how this market responds throughout the rest of the week. We still have this big picture uptrend intact. Lots of support down here in this 236 to 230 area. This is a spot that this market spent several weeks churning around, showing good support and good demand from the buyers down here. So still have plenty of supportive spots down below. Just not going to get in the way of a Trump tweet here at the moment. Let this market kind of sort out this volatility and see if it can find a good spot to bottom out, find good support levels, and see if it can maintain this 50-day moving average and this uptrend line. We'll have to wait and see what the rest of the week has in store for us. Once again, I'm going to encourage everyone to remain defensive and start to get slow play this a little bit here and let the market kind of sort this out. Let it find its footing here and see if we can turn this market back up towards those highs. But in the meantime, let's just kind of wait this thing out, see if this market will find some good supportive points to trade around, and let the institutions do kind of some of the heavy lifting here and wait for this thing to start turning back around. But at the moment, big red day here. Don't want to get in the way of that. So encourage everyone to get defensive. We need to make sure the bulls continue to maintain this 50-day moving average. We could get a breakdown here below it. If we do, we want to see how the bulls respond in this 230 to 235 area. See if they offer some support like we did back in September. But until then, we're just going to have to wait and see what the rest of this week has to offer. And just encourage everyone to stay safe and manage their risk here while this market kind of sorts out some of this news. Next up, November feeders, seeing some limit down moves here across the feeder markets today. We are rolling over into this January contract now, so we did see volume start to overtake November here on this January contract, so this will be the focus going forward. But we will just take one last peek at November here today before we let it fall off the back. Big breakdown here below that bear pivot at 371.70 today. This market just kind of selling and losing ground all day long. Did already lose up quite a bit of ground here early today, leading up into that Trump tweet, and the Trump tweet was all it really took to send this thing all the way back down there towards 364, finishing the day limit down. At the moment, don't want to get in the way of a limit down move. Once again, we are giving up that prior week's low and this 20-day moving average. Big red selling day here at the moment. Not something you really want to step in front of. Let's wait and see what this market has to offer. Try and find some good supportive points down here at this 50-day moving average or this trend line. This market also really liking this 350 level here back in September. So we'll have to wait and see how this market responds over the next couple days. But I encourage everyone to slow play it. Wait for this market to kind of find its footing and balance out here before we start to get involved once again to the long side. We just want to see how this market responds to some of this news and volatility. But until then, let's just kind of slow play this thing and see what this thing has to offer and see if we can turn this thing back around. Big picture uptrend still remains intact. We just want to make sure the bulls can defend this 50-day moving average and some of these key levels here down below. Just have to wait and see how the rest of the week plays out. But in the meantime, I encourage everyone to get a little defensive and protect yourselves here while this market sorts out this news. Next up, December corn futures. Not a whole lot of excitement here at the moment. This market just kind of going back and forth all week long. Monday, Tuesday, Wednesday's action just trading here between 418 and 425. Today we're just picking up yesterday's losses and really finishing the week unchanged here at the moment. So not a whole lot of excitement here in this corn market to be expected. Just more chop here like we anticipated coming into this week. Look for this thing to just keep on chopping here and carve out this range here between 410 and 430. Like I've said before, we just need to get a clear and close beyond either one of these edges to confirm any new trend moves. But at the moment, look for this thing to continue chopping sideways in this corn market. Crude oil prices continuing with their relief rally here today, getting a nice drive here above that prior day's high, all the way up towards the $60 mark. High of the day coming in at 59.83, so just short of that $60 mark, but running right up here to this 20-day moving average. At the moment, we are retesting our prior week's highs and showing a little bit of rejection here so far in the evening session, even though this doesn't have a whole lot of weight to it. Going to have to wait and see how this market responds over the next couple days, but we do expect to see some resistance coming in here in the high 50s to low 60s. Look for this 20-day moving average to be a nice little spot for this market to try and find some resistance. If not, we could continue pushing up here into the low 60s, but the bears here at the moment still have this big picture downtrend intact. We do have some of these prior lows that we're going to start running into with this relief rally here, so should be seeing some pretty good resistance levels here for the bears to start selling this thing and push these oil prices back down into those 50s. So at the moment, let this market kind of balance itself out, find a good level to trade around, and then we should be seeing more downside in this oil market here over by the end of the week or maybe into next week. We'll just have to wait and see how this market responds up here in these moving averages, but we expect to see this rally be sold into over the next few days. Equity markets losing some ground here today as well. We did see each of our indexes breaking down below that prior day's low and seeing a little bit of selling pressure. The S&P here, as we were coming into today's session, we did have a lot of volume getting built up here in about this 30-point range between 67.60 and 67.90. Between Tuesday and the late part of Monday's action, we did see a lot of volume getting built up here, and it just got a little heavy here coming off that opening range. Seeing this market break down below that 67.60, and then it's just a nice flush all the way down here throughout the rest of the day. A little bit of a bounce there into the close, coming back up above that bull pivot. So at the moment, we still do have this big picture uptrend intact. We want to make sure that the bulls can continue to hold this 20-day moving average and some of these prior highs right around the 67.18 level we saw from last week. But at the moment, that selling pressure coming in today wasn't really a great look. I just want to encourage everyone to continue to remain defensive and cautious here at the moment following all this recent volatility and tariff talk, price talk. It's just kind of offering a little bit of uncertainty here in this market at the moment. Trends are still intact at the moment, but we're just seeing a little bit of volatility here, a little bit of a shakeup in some of these markets and not really getting some of the follow through that we were anticipating. So might be a time to start just getting a little bit defensive and taking some of that money off the table. Uptrend still remains intact, and we do expect to see higher prices into the end of the year. It might just need to continue to sort itself out here in this big range we saw from the 10th of October there on that tariff day or that tariff talk day. So at the moment, let's let this market kind of sort itself out and find its footing across all these markets, and then we should have some smoother seas to sail down the road. But wait for some of this volatility to sort itself out. That's all we got for today. Thank you everyone for tuning in. I'll catch you guys tomorrow.